Hello everyone, Richard K here from Price Action and Income, and in today's video I want to touch on the subject of corrections and look at the DNA of how corrections tend to materialize. After that I'll move on to show you how you could use various market geometry techniques to find the end of these patterns in your own trading. Now, as we all know, corrective patterns appear in any market, and traders will often follow patterns in an attempt to identify which type of pattern they are dealing with in real time, so they can time an entry when such a pattern ends and the trend resumes again. Now, first off, I have to mention that corrective patterns go by many different names, and just as there are so many different names, so do traders employ different techniques like harmonic cipher patterns or Elliott Wave theory, to name just a few. I tend to simply call them simply ABCs because of their zigzagging nature, and I like to use market geometry techniques to guide me into a level where I think a correction might end, especially when I'm dealing with more complex corrections, or let's say a variation of a simple ABC or zigzag pattern. Market geometry will in many cases clear up the confusion of which exact correction I am following, since I am only concerned with where I think such a correction could end. But before we get into corrective patterns, we first need to look at how these patterns tend to trace out before they terminate. Corrective patterns will often trace out three waves or combinations thereof, as Elliott Wave theorists will call it. And in many cases there will be an underlying symmetry present within a correction, and this is what market geometry seeks to exploit in an attempt to find that symmetry and to identify termination levels of a correction. Now on the chart in front of you I drew a simple corrective pattern and labeled it as A, B and C. Then using simple channel lines, again this is just a picture perfect example, you will see that the last C wave ended at the top of that channel before the downward trend resumed again. Another market geometry tool that I use very often is the pitchfork. And on my second illustration, I drew a pitchfork using the shift setting over another correction, this time in an uptrending market. Now shift pitchforks work really well to determine possible levels where a correction might end, and on my second example I drew in a channel line as well, showing that in this case that the pitchfork worked much better at finding the end of this correction. Again guys, these were just simple illustrations, but in the real world of trading, corrective patterns can and will more than often not be this simple. Okay, let's now jump into some real world price action. And as an example, I've pulled up the Australian US dollar currency pair set to a daily time frame. And what it shows here is the strong downtrend that's been prevalent since 2018. And what I did here was draw quite a few pitchforks, and in some cases we had a different pattern which I'll get to a little bit later, during this downtrend, in an attempt to see whether these pitchforks actually could have helped me find the end of these corrections. There were actually a few of these trades that I did take myself, but just as an example, I just want to show you guys how accurate it can be drawing pitchforks, especially over corrections, and to determine where actual corrections would have ended in this downtrend before the trend resumed again. Okay, let's have a look at my first example of a correction that occurred here around March 2018. And if I zoom into price action a little bit better, let's just open the chart up a bit. You will see that corrections will tend to move in, like I said before, three waves or combinations thereof. You'll obviously see that they can get quite complex, but like I said before, this is what I use the pitchforks to guide me into an area where I believe a correction will end. Now, as a quick tip, whenever you see a first move higher and you do get a correction down, and like I said, they tend to work in three waves, then always expect that another wave could follow thereafter. And this is where some patience needs to be coming in from a trader side, to expect that obviously when this price made a higher high, corrected lower, and at this stage to wait for a break of this previous high before you actually draw on your pitchfork. And real quick in this example, price reached the upper median line, so what's this blue line on the top is called on a pitchfork, In this case, I used a shift pitchfork because I quite often find that they work the best during corrections, because corrections tend to be much flatter an angle than a trend would be. And you'll see that price bumped its head once, twice, and 3 times at the upper median line, and price broke downwards and the trend continued, breaking this previous low. Now later on we'll look at a few entry confirmation techniques that I apply as a filter to actually help or guide you to get into the most opportune time with the least risk possible. Alright, so that was the first correction example. Then we had the second one over here. We had a first move upwards, we had a higher low, price then broke up, and as price broke higher, in this case it would have been better, and this is one I didn't trade myself, use a standard pitchfork setting, and you'll see that price went up. It actually broke through the upper median line and then struggled to get through it quite a few times afterwards. Again, we'll probably have a look at this example a bit later using some alternative entry confirmation techniques to have timed you better into this trade, so you would have known which high you should have traded from. Then let's move on to our third example, and this is a good example where a combination of channel lines and pitchforks work really well. Not in most cases, but in some cases definitely. And this is where I also want to give you guys another tip. In this case, we have 1, 2, 3, 4, 5 waves higher. Now, whenever you're dealing with a correction, you'll, in most cases, just want to be following a simple ABC. And if we draw an A, B, and a C in there, then you'll see that this correction ended at the top of this median line and came downwards. Now this is the thing about trading, guys. You won't always be correct about things, because a simple looking correction could always materialize into a more complex correction. But if you followed some proper entry techniques and trailed your stop properly, then even if you entered here at this high, there would have been a beautiful entry. You might have been able to take a bit of profit, but you should definitely not have lost on this trade in case it reversed against you and actually formed a more complex correction. And in this example, just as a quick tip, whenever you see an ABC move that actually becomes more complex, then you're probably dealing with what we call a double zigzag, or 2 times an ABC joined by 1. So we have an ABC, price comes down, we have another ABC. And then again, you can obviously use entry confirmation filters to time yourselves into these trades, so you make better entries into your positions while keeping your risk as small as possible. Right, so this case price ended right up at the median line a third time around, 1, 2, 3 time around, and the trend continued lower. Here's another pattern that I quite like to follow. It has a high probability of working out all the time, but it does require a lot of patience from a trader's side. And this is what's called a simple symmetrical triangle. Now, as price came into this July low, it went higher, came lower, it created a higher low. Here we made a lower high, and price came down again, and all the time as price was moving to the side, it kept on contracting. And I use various techniques, in this case not market geometry that much, but just simple trend lines and something like my Fibonacci retracements levels to time an entry. But when we're trading triangles, this is another subject for another day, and I'll probably do a video on exclusively, because it's such a great pattern to trade and they're very predictable if you know what to look for. Then what do we have now? We have on our fourth example at the moment. Here we go again. Price went higher, price came down, creating a higher low. And in this case, again, after we have a first wave up, expect that we'll at least see another move higher. And in this case, yet again, price stopped once, twice. It struggled to get through the upper median line a third time. It even came down again and tested beautiful with this like doji looking bar, and price reversed lower again. Yet again, guys, there were a lot of filters we could have used, depending on your own trading techniques, to have found a sweet spot where you could enter this. And you can obviously set the rule-based entry confirmation techniques onto that to time you better into this trade. But yet again, a shift pitchfork worked excellently well to time, in this case, a picture perfect high before price turned lower and resumed the major trend lower again. Then I think we are on our second last. Here we go. Let's just open that. Second last example of where, in this case, price did not reach the upper median line. And this is the thing about trading. You can't really set hard and fast rules over price action because it will always throw you a curveball. But when things are picture perfect, then you better be around to take those trades. In this case, we have, and like I said before, if you're dealing with a complex correction, you might have taken this one if you were lucky. Price came down, you might have taken profit on there. And what happened? It turned into a more complex correction again. So if we're dealing with 1, 2, 3, like I would say an A, B, C, and it turns into another one, then you're most probably dealing with a double zigzag. And there are two ways that you can deal with a double zigzag. You can still keep your initial anchor point. I'll just switch my magnet mode on to the start of where the correction happened. Price went up, came down, and if you entered here and you exercised proper entry management and traded your stop properly, you probably would have made a small bit of money, but price never broke this low and came up again. Now, when this happens and you still consider the trend to be downward, then you should be thinking about what's next. And what's next in my case would then be, it's obviously turning into a more complex correction, and then I would probably be looking at variations of an ABC. And in this case, we have 1, 2, 3, 4, 5 waves higher, and that's a variation that we'll call a double zigzag. And look what happens when we actually move our anchor points. So we got an ABC, and this is what we call an X wave before we have another ABC upwards. And all these things are taught in some of my courses and on with my online members. And you'll see that yet again, knowing which correct anchor points to use could have helped you tremendously to find the end of this correction, which again ended up the upper median line. Now, let's just draw something else that's pretty cool to use. Now, if we have an ABC and you think you're dealing with another ABC, you can draw two pitchforks. In this case, price came through that pitchfork there. We can draw another pitchfork. This was an ABC. And look at where this correction ended. Right where this smaller pitchfork and this longer term pitchfork crossed each other and price came downwards. And again, we'll look at this example in a short while and use some additional filters to see if we could have timed this entry better. Then my last example here was when we had this huge wick here at the beginning of this year, in January 2019. Price came up, went down, and what do we expect when this happens? We have a higher high and a higher low, and we have to expect another move higher. In this case, it broke this upper level of where this first high came in, and it touched our upper median line to the T, and price reversed lower. Now this, guys, is where you'll have to practice an element of discretion. Put it that way. Whenever you're dealing with wicks that are extremely long, like in this case, then it's often a good idea to use the actual lowest price, in this case, because price was coming down, to use, in this case, the opening price and use that as your anchor point. And you'll quite often know that you're on the right track when you draw your pitchfork lines. Is when you get, in this case, a higher low, price goes up again, you wait for this high to be broken. And since this is on a daily time frame, you would have had ample time to get into this trade or wait for price to hit this level on the top here. Now, what's clues this price was giving away was, and if you look at your center median line, or even these 50% dashed lines between your center and your lower and your center and your upper median line, you'll see that price respected them pretty well. And that's normally a good indication that the pitchfork setting that you are using is actually going to work pretty well into the future. Now, just an example, if we had to move this down to the actual low of that very tall wick, then you'll see that price failed to get through the center median line. So if you were to use two different pitchforks here, and this is what we call a confluence of two different areas, you will see that in this beautiful example, price ended right at the cross of the center median line of this pitchfork and the upper median line of this pitchfork. Confluence of areas came together right there at that cross, and price reversed lower. So these examples I just showed you guys right now using my shift pitchforks, and on one occasion I actually used a standard pitchfork. They worked extremely well at finding the end of these corrections if you know what to look for. Now, I've mentioned before that I do add additional filters to help me enter into positions. And basically what this is for is to act as confirmation before I would enter into a trade. And I like to use my MACD, which stands for Moving Average Convergence Divergence. And in some cases I'll use the MACD line and the signal line to time my entries. Also with a variation of lower time frames if I do not see or divergence on my daily time frame. Now in this example where we stopped off previously, you'll see that between this peak, let me just label that properly, and let's say we had an A and a B and a C wave there, we started having divergence as price broke the high of this A wave. Price came into this high, it touched the upper median line, and at this stage, if you were just swing trading using a daily time frame like I do sometimes do, you will see that we had momentum divergence on a MACD between these two peaks, the A peak and the final C peak, before prices moved downwards, and this acted as confirmation that I could enter into this trade. Now let's zoom out a little bit again and see if we could spot momentum divergence on any of the other charts. Here again, we have prices starting up with a lot of momentum. At this stage, we didn't draw in our pitchfork. We might have timed this high, and we had momentum divergence there if you got in there. Remember, we used these lines before. If you were there to enter, the conditions would have been right to enter into there. But we moved things along because the correction became more complex. And in this case, again, between this high and that actual high over there, yet again, we had momentum divergence, which also signaled that the conditions were ripe getting into this trade, knowing that you were looking at a zone for a reversal before price actually got there. Here's a very good example of why we should be using multi-time frame analysis. And in this case, again, we had an A, B, C, which actually ended here because that high was much higher. And in this case, you'll see that price only started going upwards here. You had a lot of momentum going into this high, which did not signal a trade. But if you were patient enough for price to go lower and then actually come up and touch the median line again, then you'll see we had momentum divergence again, which could have signaled an entry. And this is where patience in trading often helps you, or should be used in your favor, and not just jumping into things unless you see your entry conditions or the filters that you apply on your trades appear before you will enter. We'll talk about triangles in a later video. And here we have price going up, and we had a high over there, but you'll see that momentum in that case was just going higher and higher. So on your daily time frame, depending on your operating time frame, if you're trading from a daily, this would not have been an entry anyway. Then the same thing over here, when price reached the median line or upper median line the second time around, again, you did not have momentum divergence. But this is why it's important that you incorporate multiple time frame analysis into your strategy. And let me just go quickly to a 4-hour chart. then here on my 4-hour chart, just having a close-up view of this correction, we will definitely see that in this case, between this high and this final high, that we had momentum divergence on a smaller time frame, which signaled an entry. And this is also a really good example so that you can only trade when price reaches important market geometry lines. In this case, my market geometry lines taken from my pitchfork. And even as price came into this high the first time, there was no momentum divergence keeping me out of this trade. But price came down again and price moved upwards again, and the last time that it touched, before it reversed, it gave a beautiful hammer pattern there in conjunction with momentum divergence second time around on the 4-hour chart. And if you wanted to enter into a more conservative trade, which I quite often do, you could wait for your actual signal line crossing below your MACD line to confirm an entry. Okay guys, I hope that I've shown you how useful market geometry techniques can be in combination with the knowledge or understanding of how corrections tend to trace out. Now, equipped with this knowledge and using market geometry techniques as a guide, it can become much easier finding the end of corrections. Then if you want to add additional filters like I have with my MACD, you can really start building a potent strategy. If you really take the time to study corrective patterns, then you will quite often get clues of which corrective pattern you might be dealing with in real time, and then using a pitchfork can really stack the odds in your favor. I hope you guys liked today's video. If so, please don't forget to hit the like button or subscribe to this channel for more insightful videos in the near future. Until next time, this is Richard K. from Price Action and Income. Goodbye.